Welcome, everyone, and thanks for joining us for the Plaid Effects 1033 session. I'm Justina Chen, and I'm a product manager at Plaid, focused on preparing for Dodd-Frank's Section 1033 open banking regulation. We have a dedicated team of policy and legal experts, product managers, and engineers focused on building for an open banking future, and I'm excited to be representing the team here today. Section 1033, the U.S. Open Banking Regulation final rule, is expected to be issued this fall. We're excited to talk about what to expect and what this means for your business, our industry, and consumers. As a leader in open banking technology, Plaid has been following this regulation closely and recently rolled out readiness tools to help our customers prepare. We'll chat a bit about those tools and how Plaid can help. Today, we're fortunate to be joined by two industry leaders with a pulse on the policy climate. One from our very own legal team here at Plaid, and an esteemed guest from the Financial Technology Association. Welcome, Elyse and Angelena. Let's take a moment and have you each introduce yourselves.
Thanks so much, Justina. Hi, I'm Elyse Whitehead, and I am the head of our enterprise legal services team here at Plaid. My team provides a range of legal support to our business partners, including in the privacy and the regulatory spaces. I joined Plaid in January 2020, and that was really at the outset of consumers' mass adoption of fintech and the exponential rise in their use of digital financial services, really due in large part to the COVID-19 pandemic. So that was incredible and exciting to watch. And having seen that evolution, it makes me all the more excited to be here today to talk about Section 1033 and the upcoming rule, which in my mind is really that kind of next step in the evolution. So thank you again for having me. And with that, Angelena, let me turn it over to you so that you can introduce yourself.
Thanks so much, Elyse and Justina. I'm Angelena Bradfield, the head of policy at the Financial Technology Association. FTA is a trade association that represents digitally native financial institutions at the federal and state level. For those who may not be familiar with what a trade association is, our mission is to advocate for our members' policy priorities in Washington, D.C. and state capitals. We do this by engaging with legislators on draft bills, responding to regulatory rulemakings like 1033, and publishing thought leadership, white papers, studies, and other materials to support our advocacy. Plaid is a member of FTA along with many other fintechs who believe in the future of open finance. I appreciate the invitation to join the Plaid team today for this discussion, and I'm looking forward to the conversation.
Thank you both. A few housekeeping items for our audience before we get into things. We'll have a brief Q&A at the end, but if you have questions in the meantime, please feel free to type them into the chat. Plaid is an open finance company. We work with thousands of fintechs, some of the Fortune 500, and many banks from the largest ones all the way to community banks and credit unions to make it easy for people to connect their financial accounts to the apps and services they want to use. All of this is powered by what we call open finance, or consumers' right to access and share their financial information. Plaid believes consumers should have a right to their own financial data and should have control over that data, no matter where it sits. Our business is built around this principle, and so we're really excited about the 1033 rulemaking and what this will mean for the ecosystem. Before we get into details, you're going to hear us talk about two primary groups, data providers and authorized third parties. I want to provide a quick definition here for you. Data providers are financial institutions like banks and credit unions, certain fintechs, card issuers, and other companies that consumers have an account with or do business with, and that maintain certain financial information about that consumer. Authorized third parties, also often referred to as fintechs or data recipients, are companies that are powered by open banking, authorized by a consumer to receive financial information from a data provider. Importantly, as the fintech ecosystem and digital banking continue to expand, many of the companies Plaid works with can be both of these parties. Elyse, for folks in the audience who may not be policy nerds like us, could you give a quick overview of why 1033 is such a big deal for the financial services ecosystem?
Absolutely. No, Justine, I'm sorry. The reason that 1033 is so important is because it's actually the United States' open banking law. And one of the keys to understanding why it is so important is actually to look at the context in which it came about. So, Section 1033 is part of the Dodd-Frank Wall Street Reform and Consumer Protection Act. And Dodd-Frank was passed in direct response to the 2008 financial crisis. So, as many of us remember, this is a crisis where consumers lost trillions of dollars. And there was really a sense that consumers had been taken advantage of by powerful financial players. So, what did the Dodd-Frank Act do? Well, it added new rules and it added oversight for the financial services industry to protect consumers, to empower consumers. And of course, this includes Section 1033. At its heart, Section 1033 is about giving consumers power. And it does this in two ways. One, it tells consumers your financial data belongs to you, not to your bank, not to any other financial institution where your data may be held, but to you, the consumer. And two, it tells consumers that you or the parties you choose to authorize have a right to access that data and securely share that data. And so, what happens is when you put those two things together, what it means is consumers really have the right, or the power, I should say, to take their financial data and move it where they need or want so that they can gain access to the competitive and innovative financial services available in our market. That's why Section 1033 and the upcoming 1033 rule are so important. It is all about giving consumers choice and control over their financial lives.
Absolutely. Thanks, Elyse. Now that we have a sense of 1033's importance, could you give us a quick preview before we get into more detail of what the rule covers in terms of empowering consumers in open banking?
Yes, of course. So we were just at the Dodd-Frank Act, and if we fast forward a bit from there to today, the government agency that was actually born from Dodd-Frank, so the Consumer Financial Protection Bureau, or the CFPB, which of course is tasked with keeping consumer financial markets fair, the CFPB is in the middle of writing a rule to implement Section 1033 of Dodd-Frank. That's happening right now. And when we talk about the rulemaking, the subject we're all here today about, what we really mean is that the CFPB is going to give us a how-to guide for putting. So law tells us consumers have the right to access and share their financial data, and then the rulemaking is going to tell us how. How do we make sure that consumers can actually go about doing that? This rulemaking has been a multi-year process. We're expecting a final rule this fall, but we do know a bit. Based on a draft rule that the CFPB published back in October of 2023, we have a sense of what some of this how is going to look like. Two examples I'll highlight here. First, the CFPB has indicated that the rule is going to require parties that hold data, so those are the data providers, Justina, that you mentioned under the rule. The rule is going to require those data providers to make consumers' data available safely and securely via APIs, or they're called developer interfaces under the rule. And the second thing that I'll call out and highlight is that the CFPB has also indicated this rule is going to put consumers in the driver's seat when it comes in third parties to access and use their data. And it's going to do this by requiring certain disclosures to consumers and also by putting certain restrictions around the collection, use, and sharing of data. We're going to touch on some of those requirements a bit later today. But what I will say, in short, is that by addressing these areas, our hope is that the rule is going to go a long way toward empowering consumers with that greater financial choice and control that I mentioned earlier.
Thank you for that preview, Elyse. Angelena, from your perspective, we'd love to hear how FDA views the upcoming rulemaking. What's the impact you believe it'll have on consumers and businesses that are powered by open banking technology, especially fintechs?
Absolutely. Well, from an FTA perspective, we're excited about the CFPB's forthcoming final rule, given that open banking is already powering so many important use cases across the fintech industry that improve consumers' financial lives and enhance competition. Today, fintech adoption is nearly ubiquitous. It really is the new normal, and Americans are finding value in the digital products and services that are being offered to them. A final 1033 rule will reaffirm their ability to use these products and services in some cases while opening the door to future innovative developments as well. According to Plaid's Fintech Effects report, 8 in 10 American consumers rely on fintech, half use fintech daily. Americans on average use 3 to 4 apps to manage their finances. I know that for me personally, I use many more. And fintech has helped 90% of consumers in some way, whether it's saving them time or money, giving them more control over their finances, reducing fear, or helping them recover from a financial misstep. So, As we think about getting to the end of the rulemaking process, FTA believes that strong rules of the road for open banking will provide clarity and promote trust, which will be good for the financial services industry and likely accelerate the development of new services and innovations. At the same time, we will be reviewing the final rule closely. Over the last few years, we've engaged in various advocacy initiatives with our members to promote policies that will deliver on the rule's intended benefits to consumers in the financial services ecosystem. For example, we want to ensure that open banking data can be used for new, innovative, valuable use cases that consumers want. In addition, while the rule will initially be generally applicable to products and services like banking and credit card accounts, we support a phased expansion to other types of financial arrangements, from student loans to mortgages to investment accounts. Ultimately, we want an open finance system that fosters competition and responsible innovation in financial services, permits more informed comparison shopping and product selection, provides a more holistic understanding of financial health and wellness for consumers, and ultimately facilitates greater financial choice and opportunity.
Thank you both for giving us this context about upcoming open banking regulation. We're in for a lot of upcoming changes and hopefully great outcomes. A lot of our audience are Plaid customers, and we expect them to be affected by the rule. What are some of the expected requirements for fintechs and other companies, Elyse?
Sure. So when we talk about fintechs and other companies receiving data, including Plaid customers, we're generally talking about what are called authorized third parties under the rule. That's what you were mentioning earlier, Justina. And the key takeaway for authorized third parties is that they need to take certain steps to be able to securely access data. And of course, we know that our customers and other authorized third parties need to be able to access this data to continue to provide financial services to consumers that are powered by that open banking data. The draft rule has a lot of detail around this, but there are three main requirements and steps that I'm going to highlight today. The first is authorization. The proposed rule says that third parties have to get consumers' authorization to access their data. And of course, the intent behind this is to make sure that consumers are aware of what data is being collected and how it's going to be used and shared. There are other requirements related to authorization that are also worth noting. For example, consumers need to be able to revoke their authorization at any time, and authorization has to go through a reauthorization process at least every 12 months. The second step I'll highlight is record retention. So the proposed rule requires authorized third parties to keep records to show that they've followed the authorization requirements and procedures that I just mentioned. And then finally, the third step I'd highlight is onboarding. So in order for a consumer to be able to share or permission their data to our customers, to authorized third parties, those third parties first need to provide certain to help verify their legitimate entity, to show evidence of adequate security practices, with the underlying idea being that we want to have various mechanisms in place to protect consumers' data. So, Justina, I'm going to turn it back to you in just a second, but I will quickly note Plaid is well positioned to help with all of these requirements that I just highlighted. Justina, you're going to cover this later on.
Thanks, Elyse. Angelena, turning to data providers, what are some of the key requirements the rule establishes for data providers? A lot of Plaid's customers may also offer financial services that put them in this category.
Absolutely. Great question. So, first, it's important to say that no matter where you manage your money, whether it be a big bank or a small credit union, 1033 will formally enshrine a consumer's right to control and securely share their financial data. Second, as we've already discussed, it's important to note that, my answer to this question is generally based on the CFPB's proposed rule. So, ultimately we'll have to see where the final rule nets out on a few of these issues. However, at a high level, data providers will likely be required to establish and maintain a developer interface, aka an API, for third parties to access consumer authorized data. The developer interfaces will need to make available covered data in a standardized format in a commercially reasonable manner without unreasonable access caps and pursuant to certain security specifications. The proposed rule also included additional requirements for data providers relating to access and performance requirements. And in addition, the CFPB has separately recently released a final rule for a standard setting body that will, among other things, enable the development of API standards. In addition, data providers will also need to retain authorization records when consumers permission data from them to an authorized third party. And data providers will likely also have the right to assess whether a third party is a legal entity and maintains adequate data security. Of note, and it's important to highlight as we're talking about these issues, we increasingly foresee companies operating as both data providers and data recipients, which will impact the compliance calculus for many of the institutions on the line today. For instance, a bank may make consumer permission data available while also leveraging open banking data it receives to build its own services and tools.
Thank you both. That's a lot to consider for Plaid's customers. Angelena, fintech is a hot issue in Washington. What's top of mind for regulators?
Absolutely. So, first, it's important to look at the political landscape. Unlike many policy issues, and I'm sure everybody can see this every day on their TV screen, 1033 has generally received bipartisan support, and it's been pushed by both banks and fintechs and others, and is seen as having the potential to improve consumer choice and competition, a strong focus of both regulators, including the CFPB. There will also be related impacts as the final rule is rolled out, and the standard setting organization that I mentioned before releases various pieces of technical guidelines. I think we'll continue to see engagement from regulators on some of these issues and provisions, as well as consideration around the supervision and examination expectations relating to the 1033 rule. However, ultimately, I think the nature of the financial products and services is changing. So both the federal and state regulators are kind of working to keep pace with 1033 developments and other developments more broadly, sort of in the realm of bank fintech partnerships.
Love it. Elyse and Angelena, one last question for you both. Let's wrap on a high note and look ahead to the innovation we can expect in the coming years. What'll the state of fintech be in the next 5 or 10 years once open banking regulation is cemented in the US? What do you hope to see for consumers in our industry? Elyse, why don't you kick us off?
Sure. I think we are headed toward a very bright future. And I think that future is one that is going to realize all of the consumer benefits of open finance. This is a future where everyone has the ability to securely and safely and easily manage their finances basically from their phone. And they're not limited by things like location or their background or where they choose to hold their money. And here's the thing, we're actually already very well on this path to that future. The US has the largest fintech and digital finance marketplace in the world. And that is because we have been driven by consumer demand and innovation and competition. And those drivers are going to continue to be really critical as we progress toward this open finance future. In line with this very dynamic ecosystem, we also now have regulation coming. And I think that that regulation is actually going to do three things that further move us toward the future. One, it's going to reaffirm. The second is it's going to provide important guardrails that protect consumers. And the third is it's going to foster trust. And that trust is ultimately something that we need for continued growth and adoption of digital financial services. So, all of that to say, I am so excited to be a part of this future. I'm so excited for us to be a part of this continued push for all consumers to have really expansive rights to access and share their financial data. And when we get to this future, we can look forward to more competition, more innovation in the ecosystem. And that's when all of us, but especially consumers, will win.
Thanks, Elyse. Angelena, what about from your perspective?
Absolutely. So first, as I know we've already discussed, it's important as we look ahead to recognize that we expect a final rule to be released later this year. I think, in just for for folks maybe who aren't as familiar with the rulemaking process, the typical approach that the government takes is to release a proposed rule, allow entities to comment, including Plaid and FTA and many others, and then they ultimately take stock of those comments and release a final rule. So that's kind of the next element, which is that sort of synthesizing of comments received and then how that impacts the final rule. But within that, as we think about key dates, we anticipate that in the final rule, an implementation timeline will be provided. The proposed rule, which we can at least use as a bit of a guide, it included a phased-in timeframe with some requirements going into effect as quickly as 60 days and others taking much longer, and many times dependent on the type of financial institution and or its size for elements of the requirements that might be applicable. So, I think ultimately our hope is that the final rule will enable in the near term the consumer benefits we think it has the potential to provide: enhanced consumer choice and access, increased competition, and enhanced tools for financial health.
That is all super exciting. We just talked about a lot about the positive change the new rule will have on the industry for consumers, for companies accessing consumer data, and for the whole financial services landscape. However, we discussed today that the open banking regulation will come with new obligations to be aware of. As a product manager myself, I know firsthand how much work it is for teams to prepare for and operationalize any new regulation, especially one this significant. These obligations can be a strain for compliance teams of all sizes, especially given the 60-day compliance window for many of Plaid's customers currently outlined in the proposed rule. Fortunately, you don't have to do this alone. Companies can opt to work with their data access platform partners like Plaid to help meet many of the key new requirements in a post 1033 world, including authorization and onboarding. That means you don't have to devote as many limited internal resources from engineering and compliance teams to something that isn't your core product but is part of ours. If you also offer 1033 covered services that may make you a data provider, Plaid also has solutions to help you quickly build an FDX aligned API for data access and to gain visibility in your users' connections across the ecosystem. We encourage you to start these conversations now with your teams to start understanding your compliance requirements and to have a plan to prepare for compliance. Preparing for compliance is no small effort, but an area where Plaid continues to invest significant resources to support our customers. For example, we recently introduced data transparency messaging, which provides a standardized way for thousands of apps and services on the Plaid network to give even more information to consumers about how their data is being used, especially relevant ahead of the anticipated 1033 rules requirements for authorization capture. Additionally, we are well positioned to help our customers meet future requirements. We have tools in market that promote ecosystem safety and transparency, including Plaid Portal, which has helped consumers control access to their financial data. As we look ahead, the Plaid team is building and updating our 1033 readiness solutions with our customers and consumers at the forefront of all we build. Coupled with that, we're continuing to roll out additional resources like a readiness guide and implementation tools to make taking action as seamless as possible. And as always, we'll be monitoring impact on security, privacy, item longevity, and conversion to ensure safe, fast, and secure data access. We're also working closely with data providers to make sure what we build meets their expectations so you get to focus on what's most important, building great experiences for consumers. Several of these solutions, like data transparency messaging, are available to start testing now, and more will be released over the coming months. On May 30th, we released a detailed blog post recapping our 1033 readiness solutions and how they will map to requirements in the proposed rule. We encourage you to check it out for more details, and we'll include a link in the replay from this conversation as well. And Plaid will continue to update these tools as the rule is projected to be finalized later this year. With that, I know we covered a lot, so we'll open it up to Q&A now. First question, what is the timing of enforcement on the rule, and do we expect any fluctuations? Angelena, do you want to take this one?
Happy to, Justina. And so first, I apologize. I will make my same caveat as I just did previously. We are still waiting on the final rule. So I can only answer this with the best guess. But based on what we saw in the proposed rule, which again, many stakeholders commented on, as a general matter, we anticipate certain elements of the rule to be effective within a few months. I think one of the things we saw in the proposed rule was as short of a time frame as 60 days, whereas other elements, for example, like the requirements for data providers or financial institutions and other entities that are sort of part of the requirement to share data, will likely be set on a longer time horizon and really dependent on the entity type and size, and therefore ranging in time based on those sort of parameters as to when the requirement to kind of stand up that API component in particular will be required. However, again, we'll be able to at least know a little bit more once the final rule is released, which of course we anticipate to happen this fall.
Thanks, Angelena. Next question, who's responsible for capturing consumer authorization under the rule? Elyse, do you want to answer this one?
Sure. Thanks, Justina. The short answer is the authorized third party. So the Plaid customer receiving data is the one slated to be responsible under the current draft rule that we have. But I will also say that under the draft of the rule, authorized third parties can also opt to work with the
I think we may have just lost Elyse for a minute.
That's okay. We can go on to the next question. Angelena, how does this compare to other markets and efforts around the world?
Absolutely. So maybe I'll just take a quick moment to set some of this up. I mean, not entirely sure, from the folks who are on this webinar today, kind of the perspectives that you may have, and you may already be operating in other markets. But I think one of the things that's important to kind of be aware of, and it actually ironically goes back a little bit to what Elyse was saying when she was describing the advent of Section 1033 itself. As I think you're aware, there's a lot of work amongst regulators in other jurisdictions to at least have general sort of approaches to certain issues in the financial regulatory space. And there are various supranational bodies that do this as well. But I think one of the things we've seen a lot of coordination around things like capital and liquidity requirements, resolution, things coming out of 2008. I think open banking, amongst other things, is kind of the next horizon. The US is slightly behind, frankly. I think some of the other jurisdictions, at least in finalizing its rule, we've seen other governments in the UK, Australia, Singapore, and even recent actions by the Canadian government to kind of move forward with their open banking and open finance process. We're obviously very excited and encouraged with all of the work the CFPB has done and how close we are to a final rule. And also obviously very supportive of solidifying the open banking for both consumers and for financial institutions. But I think at the end of the day, the good news is that the U.S. can and is, benefiting from the lessons learned from these other government efforts. And I think, using those lessons to create the right balance between sort of the regulation and the market, and being able to leverage the lessons learned then to kind of establish not only the final rule, but I think also, we'll see it filter into some of the standards that the standard setting organization creates and things like that. So, I think there's a lot of scope there for us for sure.
Absolutely. So that's all the time we have today. I'd just like to say a big thank you to Angelena and Elyse for joining us to share their insights and read on the proposed rule, and to you, our audience, for taking 30 minutes out of your day to dive into the world of 1033 open banking regulation. As a recap, we encourage you to start reviewing proposed requirements as soon as possible. Plaid is here to help, and you can check out the blog now and stay tuned for more information on how to partner with Plaid to get 1033 ready. Thank you.